Hey all, welcome back to channel S Quick Invest. Today we will do a deep dive into warning signs of financial products. PIMCO Income Fund, a global bond fund. The PIMCO Income Fund is absolutely a bond fund, not a money market fund, and the risks are substantially higher than the enhanced liquidity funds sold by fintechs. Primary goal: high liquidity, higher yield, high current income. Secondary: capital appreciation. Asset class is short-term investment grade debt. Maturity approximately 6 to 18 months. Global multi-sector bonds, securitized debt, investment grade, emerging markets, high-yield credit. Risk level, low to moderate. NAV fluctuation is small. Risk level, moderate to high. NAV can drop significantly, as seen in market downturns. Duration very short, low interest rate risk. Duration intermediate, longer, higher interest rate risk. Key warning for viewers: the PIMCO Income Fund is designed for sophisticated bond investing. It uses complex, diverse instruments, including derivatives and riskier asset classes like emerging market and high-yield credit, to achieve its high payout. It is not a cash substitute, and its value can and does fluctuate significantly. What does income in a fund name mean? The word income in a fund name is a major red flag for your viewers if they are looking for capital preservation. It's a marketing promise that means the fund's primary objective is to generate a cash payout, a high distribution yield, rather than prioritizing the growth of the fund's unit price, net asset value or NAV. Money market fund: preserve capital and ensure liquidity. Put stability ahead of returns. Income fund: maximize payouts, dividends, distributions, to the investor. Puts payouts ahead of stability. Often requires investing in riskier, higher-yielding assets to sustain the payout. The trap: many income funds pay out more cash than they actually earn, leading to erosion of the fund's principal, NAV decline, over time. This is called returning capital. The investor gets a high monthly payout, but the value of their original investment shrinks. Warning signals in fund descriptions. When you are researching a product that promises high interest or income, here are the terms that should sound a loud warning bell and confirm it is not a safe cash alternative. 1. The big risk statement. Variable net asset value, NAV. You can lose your principal. This is the defining difference from a savings account or a true MMF. Not capital guaranteed, the platform and its bank will not cover your losses. Your money is subject to market fluctuation. 2. The investment strategy. Intermediate, or long duration, high interest rate risk. The fund's value will drop sharply if central banks raise rates, or if future rates are expected to rise. High-yield credit, emerging markets, securitized, high credit, default risk. The fund is lending money to riskier borrowers to get the high income. Derivatives, swaps, leverage, complexity and amplified risk. The fund uses advanced financial tools that can lead to large, fast losses. 3. The payout structure, the income trap. Distributions may be made out of capital, you are getting back your own money. Part of your high payout is simply returning your original principal, meaning the fund's NAV is slowly shrinking. High distribution yield versus low total return. The fund is paying you to watch your money disappear. If the high distribution yield is much higher than the actual total return, the fund is losing value. The trap: these platforms promise returns far higher than any bank because they are essentially lending your money to small businesses or individuals with high credit risk. The risk: there is no fund structure and no liquid bond market. If borrowers default, your principal is gone. Credit risk: if everyone tries to withdraw at once, the platform simply cannot give you your money back until the loans are repaid. Illiquidity risk, which is exactly what leads to the frozen withdrawal scenario. This is the highest risk trap of them all. Let me know in the comments if you bought into any of the fintech products. If you find this information useful, do like and subscribe so more Singaporeans will get to watch. Disclaimer: information in this video is provided for educational purpose only and should not be considered as financial advice. Always do your due diligence or so speak to licensed financial advisor before making investment decisions. Thanks for watching and see you in the next one.